Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope everybody had a very beautiful day and a very beautiful weekend as well. And in today's markets, guys, well, the bulls just continue their march forward, completely dominating this entire market right now, in full control of the monthly, weekly, and daily timeframes as well, although we are getting into a little bit of daily overbought conditions. Now, in terms of what we were looking at for last week, guys, we were saying how the market was lacking a little bit of rotation and lacking a little bit of breadth. Big tech was doing most of all the heavy lifting. At least today, though, things do appear to be slightly shifting. Now, although one trading day doesn't represent a trend, we need to stay focused on that rotation, guys. So in today's video, we're going to take a look at a few things together. We're going to take a look at, of course, our major technical analysis rundown in terms of our major stock market indexes, and then our major big tech names, and see if it's a good proposition to be buying at such elevated levels for continuation, or is it maybe a better trade to potentially wait for a little bit of a pullback. So with all that being said, guys, let's get right into today's video. So SPY up about 0.8%, QQQ up 1.22%, but we did have some very nice rotation across the board, stark contrast to last week's trade. Now take a look at the heat map here, guys. You can see that most of everything was pretty much green on the day. I apologize, I don't really have the FinViz group, the FinViz map up, because pretty much it's broken on their website. All browsers, everything just gives you a big blank screen right here. So we're going to take a look at this one instead. So in terms of the heat map, guys, everything performing really, really well. Technology netly up for the day across pretty much all of the lines of technology in here. We also had some decent performance, especially by financial services, which had been lagging behind in the last 2 weeks of trading. And we were saying that if SPY wants to continue its rally higher in the event of a QQQ technology pullback, financials needs to pull its own weight. And so far, so good, having a nice sector recovery today. Even consumer cyclicals participating in today's rally. Everything pretty much in the green overall, except for our healthcare sector trailing a little bit behind, but that's okay. They've really put in substantial gains over the past 2 weeks. And utilities and real estate lagging a little bit behind as well. But for the most part, guys, our major market indexes, the ones that pull the most weight in the market, for the most part, have been doing quite well today. Take a look at the group performance here on the one-day relative. You can see that most of everything was in the green, as we've been discussing, except for pretty much healthcare, real estate, and utilities. On the 1 week relative, guys, still a little bit bland, however, right? Even though we got a decent one-day performance of overall broad market recovery, well, unfortunately, guys, you know, everything is still a little bit too heavy in the form of technology outperformance. 1 week technology up 6.16%, and the rest of everything pretty much either muted or still slightly down. So I wouldn't say that 1 day of very nice rotation is enough to set a trend, but it's definitely a step in the right direction, guys. Now, in terms of what we're looking at for this week, well, we don't really have much macro data at all. We have retail sales coming in tomorrow morning. That's going to be interesting to see how consumers are faring in light of heightened prices still. And then we obviously have on Friday, we do have a few other secondary reports, such as the services PMI. So that's going to be giving us a little bit of an indication here as to our services inflation. Even though we got a result last week, which was very favorable, we're going to get another one this week. So we will see how this one goes as well. Now, in terms of our earnings, guys, earnings season is pretty much wrapped up right now. We really don't have too much in the light of earnings. We do have Lennar after the close today and KB Homes, two of our major home builders in the United States. So we'll probably take a look at both of those tomorrow after the close when we get a bit more information. We're probably going to do a broad market analysis of about 3-4 different home builders and see which one has the better value proposition, right? KB Home, Lennar, Toll Brothers. We're going to go through probably 3 or 4 of those and determine whether or not there are some good deals to be had there. But for the most part, guys, no more real major big earnings to be had just yet, right? So in terms of that, that's pretty much out of the way. And I also wanted to bring up this, guys, with such heightened euphoria, pushing the all-time highs, QQQ just blasting higher, companies like AVGO and NVIDIA really pushing beyond the all-time highs right now. Everything seems to be in a big state of euphoria. At least that is what you would think, right? So let's take a look at the CNN Fear and Greed Index, and you expect this one to be bright green, right? Let's pull it up. Well, it still shows that the markets are a little bit fearful here, guys. And I largely do think that that is a byproduct of just how not broad the overall market has been in the last couple of weeks of trading, right? Referencing pretty much this. Although we do have some good outperformance in the technology sector, the rest of the market still is not keeping up, which is why you probably have a lot more fear than greed right now, because the greed is all focused in one single sector, which is your technology and semiconductors right now. But in terms of the rest of the S&P 500, probably about 75-80% of all companies, guys, they're just not doing that well in the past 2-3 weeks of trading, which is maybe the reason why we have a little bit of a fear indicator right there, right? So a little bit of a contradictory element in the market right now. We are in a fear scenario. However, the markets just continue on pushing new all-time highs. So hopefully that clarifies a little bit of the discrepancy, in my opinion, once again, due to the market not being that broad. So let's get right into our technical analysis portion of the video, guys. And SPY, we're going to do these quickly because not much has changed, right? Very healthy daily uptrend still on the SPY, pushing a new all-time high. Our daily higher lows are right here, 539.59. So in the event, whenever this move does top out, we're going to be looking for a daily higher low for that further trend continuation. Now, in the event of a pullback, because we are in a heightened area of RSI on the SPY and the QQQs, right? We could maybe be expecting a little bit of a pullback. However, you can see that in the past, although we do get overbought conditions on the SPY, it doesn't necessarily mean that we're going to get a substantial drop. It could also mean just a little bit of sideways consolidation, patiently consolidating before putting up a next leg in the market when the RSIs are at a little bit more of a manageable level, right? So in order for us to see that, some sideways consolidation, what we will need to see is QQQ definitely pull back off its highs, but we need to see financials and healthcare recover for the losses on QQQ. And that is what, in my opinion, is going to keep the SPY relatively healthy in the overall context of the market. But as you can see, guys, the bulls are in absolute full control on the weekly as well, absolute full control of this weekly time frame. So even if we do get a little bit of a daily downtrend right here, no problem at all, guys. The bulls have created a lot of space now above our lows, roughly 518, right? Any pullback on a weekly time frame would just be looking for a weekly higher low for the continued trend expansion by the bulls. Looking very good, creating a lot of space, guys. Now pretty much 5% between us and the weekly higher lows. And the bears have a ton of resistance, or support rather, to get through in the event that they really want to flush our weekly higher lows, right? They have all of this previous all-time high level to get through, and that is not going to be an easy thing for the bears to do. So all in all, guys, the bulls are still in very much full control right now. If we're looking for a little bit of a short opportunity, I would be looking for a loss of the hourly time frame, and thereafter, when we do lose the hourly time frame, entries can go somewhere like this. The stop loss goes above here, and then we're just targeting pretty much our most recent level of prior resistance, which should now be support. So a little bit of a trade opportunity, guys, and the moral of the story leading into such overbought conditions, in my opinion, guys, it is a very risky endeavor to be starting positions at the all-time highs in overbought conditions like this. Now, it is definitely a good trade opportunity for some different names, potentially for some continuation to the upside. However, starting a position up here on names that are at all-time highs in overbought conditions is a risky proposition, especially if you're going in with size, right? So we may want to wait for a little bit of a pullback, especially if you want to add some size to some names that you've been waiting for a pullback on. But in terms of where we stand right now, I really think this is going to be a trader's market, at least for the next few days, until we start cooling off these RSI levels to something a little bit more manageable, right? But all in all is very good, guys. Can't really knock the fact that we're moving higher. The more space that we create between us and our prior all-time highs just gives us that much more cushion for the eventual weekly higher lows for the trend continuation. Moving on to QQQ. So QQQ, pretty much the same analysis, right? Very gorgeous daily uptrend on the QQQs right now. The higher lows are a lot further than they are on SPY. They're all the way down here, 462. So as soon as we do start pulling back, any move lower above 462 is just going to be for a daily higher low for the potential trend continuation. So the bulls are really in full control of this chart and now putting a lot of space between us and the weekly higher lows, right? Gorgeous weekly uptrend. Any move lower, even if we do lose this daily move higher into maybe a daily downtrend, that is okay. Just going to be looking for a weekly higher low for further trend continuation. So the bulls have a lot of space between us and those higher lows, guys. Talking now about 8-9%. That is a very, very large amount. Couple that with the fact that this location is very big support. Prior all-time high resistance, going to be support, going to be very challenging for the bears to do something like this without some extreme macro data slowdowns, right? Slowdown in the economy, slowdown in the jobs market, and higher than expected inflation. That is the only reason where we might get a little bit of an extended period of monthly consolidation, similar to what we had in last fall. Now, moving on to financials. Financials having a great day of recovery, and they really needed it, guys, because we were getting very dangerously close to some of our larger support areas that we could not lose, which is pretty much your monthly higher lows, right? So as of now, guys, the bulls trying their best to put in a bit of a daily recovery. So daily downtrend is still a thing. Now we have a decent bounce after 1 day of trading. Take a look at the size of the bounce. Size of the bounce is almost 75%. Very, very good. It does create enough space for the bulls to eventually, when this move is topped out, set a daily higher low and get us back into a nice daily uptrend. Now, that being said, guys, on the weekly, we are currently in a bit of a weekly downtrend. So any movement of the daily trend higher is going to do wonders to start reversing even this weekly time frame as well. The most recent weekly higher lows are right here, 41.72. So the most amount of space that we can recover sets us up nicely to eventually recapture that weekly uptrend. So it's nice to see the bulls when it truly matters, right? When it truly matters, coming in big and playing some defense. So looking very good on financials, no real red flags. As I've continued to say, my favorite play in financials right now remains either one of Visa or the second MasterCard. I kind of pair them together there. But pretty much the same technical setup. They've been pretty much down for the past 2 months at this point. Let's call it just very, very healthy, slightly down monthly consolidation on those two names. They're still my two favorite plays in all of financials right now. Moving on to healthcare. So healthcare taking a little bit of a downside here today, but the downside is really healthy, right? So huge daily engulfing move, looking for the daily higher low for the continued trend expansion. Where are we reacting from, guys? The area of confluence we pointed out last week. Prior support is current support as well, and we do have the support of the 26 moving average there too. So bulls really looking to build a line of defense right here, set up for the daily higher low, and then push higher. If for whatever reason, guys, we fail and roll over into a daily downtrend, is it that big of a deal? Well, not really, guys, because the bulls have created a ton of space off of our weekly most recent higher lows, 140.65. Tons and tons of space to set a new weekly higher low and go for the continued trend expansion into our all-time highs. So healthcare looking relatively good, if I do say so myself. Moving on to semiconductors right now. Semiconductors continue their absolute tear to the upside, and today they were not really led by NVIDIA. NVIDIA was actually a bit red on the day. They were led by another behemoth in the semiconductor space, led by AVGO, right? Take a look at AVGO's performance today. 5.41%. That is absolutely a substantial gain, guys, for a company that's pretty much trading at around an 850 billion market cap. A 5% day is very, very good for them. Really getting extended now on the daily RSI, so I would not be surprised if this move does top out relatively soon and then goes into a little bit of healthy, keyword healthy, consolidation, right? So that's why SMH was really up high today. All in all, guys, gorgeous, gorgeous, gorgeous daily uptrend. This is picture perfect at this point, right? A little bit overbought on the daily, so I would be wary of a little bit of a short-term pullback, especially in relation to our QQQs, right? Semiconductor has really been leading the charge so far, so I would not be surprised if they are maybe the first ones to consolidate. At this point, guys, as soon as they do consolidate, anything above 250.5 is going to be looking for a daily higher low for the continuation of the daily uptrend. Now, keep in mind, guys, we do have a healthy amount of space below us, almost 8% between us and the daily higher lows. That is a very big amount of space. But if for every which reason, guys, we roll this over, fail the all-time high again, and go into a daily downtrend, you know the drill. At that point, we'll just be looking out for the weekly higher low, anything above 198.26. Weekly higher low for continued trend expansion. This chart is looking very, very good. No real signs of red flags appearing just yet, other than slightly overbought daily conditions, but that is no stranger to SMH. You can see if I put a line here, you can see how often it's hit these levels of daily overbought. And oftentimes, guys, even though it does hit daily overbought, it really doesn't consolidate that much, right? Take a look right here. You had one area of daily overbought. It consolidated ever so slightly for maybe a couple percentage points in drop, right? About 4%. We had another indication of that right here, whereby we hit daily overbought conditions and then just consolidated sideways before cooling off and then falling off a bit more. Similar here as well, right? We did hit daily overbought conditions, came down ever so slightly, and then just resumed the trend. So as I said, guys, we're not expecting a tremendous drop off, maybe just a little bit of necessary cool down. Now moving into IWM Russell. IWM Russell is getting a little bit of love today here, 0.84% to the downside, and that is largely because your yields were fairly muted today as well, right? So the Russell really does well on a day where the yields are not up too much or even are slightly down. So in terms of the Russell, guys, the same analysis still pretty much stands right now. Daily downtrend still underway. We are looking for the size of the bounce in relation to 207.30. Get us as high as possible, preferably above the moving averages, to be able to reset into a new daily uptrend and put an end to this weekly consolidation that we've been in, right? The bulls are looking for the weekly higher low to then get another weekly leg higher and desperately start attacking this big 212 level of prior support, which is now going to be current resistance. resistance, and it is reacting nicely within our zone of consolidation, right? This level right here has been a huge level, guys, for pretty much the last 2 years. So this is what the bulls are trying to defend right now, and so far they are doing a pretty decent job. Now, moving into the Dow Jones also getting a little bit of recovery here today. So the Dow Jones, I'll remind you, we were in jeopardy of, losing potentially the weekly uptrend as well. So huge move down on the daily, which led us to believe, pulled back too much. If ever they set the lower high and lower low, cracking our lows right here, that would be the first weekly downtrend on the Dow Jones since last fall. So far, so good, though. The bulls are playing defense exactly from the green box that we've left on the chart for now the past 2 months. That is pretty much our 38,600 down to about 38,300, reacting very nicely. So what the bulls are trying to do right now is they're trying to convert this into a new daily uptrend, right? So nice daily bounce higher, a little bit of a daily downtrend. That was trying to set up for a weekly higher low to get this weekly trend back. So all in all, the bulls not looking too bad. If we do get a break above, let's call it 39,100, it'll set up the bulls perfectly to reset the daily uptrend, use these moving averages, which are above us right now, as potentially newfound support, and then give us that daily uptrend and really put an end to this weekly consolidation and start attacking those all-time highs once more. So the Dow Jones not looking too bad. The bulls finally pulling their weight there. Now, that's pretty much everything we had for our major stock market indexes. Let's take a look at our big tech names, shall we? So moving into Apple having another blowout day, guys, 2% to the upside, right? Apple just cannot be stopped at this point in time. So Apple, what are they going for, right, guys? So beautiful daily uptrend right now. Daily higher lows are set, and we're trying to make a new all-time high. The daily higher low is right here, 211.10. Now, for ever which reason, guys, if Apple is unable to push to new all-time highs, we are going to maybe be looking for a little bit of a daily downtrend rollover. How do you know that's coming into effect, guys? Just watch the hourly trend. If they roll over the hourly trend into the rest of the week, well, then you could be potentially expecting maybe a little bit of a double top here, maybe roll over, break these lows, and that would be a daily downtrend started, which would be the start of very, very healthy weekly consolidation for Apple. Apple has not had 1 week's worth of pullback in the last 2 months of trading at this point, so any move down is going to be highly appreciated by the bulls. We're going to get a chance to cool down these heavily overbought daily conditions as well. So in the event we do start pulling back daily downtrend, going to be looking for a weekly higher low. Anything above 165, guys, is just going to be looking for a weekly higher low for further trend continuation. Now, we'll watch the size of this pullback here, guys. But so far, I don't really see any entry opportunities for Apple just because we really haven't set any support levels whatsoever on our way up, right? So what I'd maybe be looking for is a little bit of a pullback, maybe into the 12 EMA, sitting right around the 205 level. That could be an initial swing trade idea, but my preferred swing trade idea would have been a retest of the all-time highs, but we just didn't get it yet, guys. So as of now, no real trade opportunity for me on Apple specifically. Moving on to AMD right now. So AMD not looking too bad today, down about 0.77%, but still desperately trying to cling on to our last line of defense right here around the 160 mark, right? Now, I know today they closed below, but you get the idea, right? They're still trying to protect the exact same zone and then are arguably lower, guys. If for whatever it's reason, guys, this daily downtrend continues a little bit lower and we do come down, I do believe that, you have your first line of defense right here at 150, and then the support gets extremely juicy at the 140 level. Moral of the story, guys, I will continue to play short puts anywhere 155 all the way to 140 because I do think, guys, that when AMD gets through this period of consolidation, provided that the rest of the markets remain optimistic and semiconductors do remain the play of the year, which I do think they will, AMD will eventually be able to reset this into a daily uptrend, reset this as well into a new weekly momentum higher, and finally start attacking the prior all-time highs, right? So not looking too bad on AMD whatsoever, but the bulls definitely have a lot of work to do. Step number one is going to be recapturing the daily uptrend. So that would be a break of 162. If we can get a break of 162, reset higher low and move higher, your daily uptrend is now in motion. And then we can say our weekly higher lows are currently set and looking for that next weekly leg higher, which should take us right up into the 175 to 180 area. So I really like AMD in this swing trade location, guys. It's a very, very tough proposition to say exactly when we are going to bottom out. for that rally, right? So the way that I can play this, obviously I've been playing short puts, but if you don't have access to short puts and you want to take a little bit of a stab at AMD, I really see no problem if we start a position right here and then potentially dollar cost average if ever it goes lower and lower into our support range, just because even lower, guys, represents even better value. And I think this is a relatively easy trade for the rest of the year, considering that AMD is really starting the rollout of their data center applications this current quarter. So we should be getting some really good results from them in the next 2 quarters on that business line. Now, moving on to Amazon. Amazon not looking too bad today, up 0.22%. So Amazon doing a great job of just holding the highs, right? So I'll remind you what we were looking at. Daily downtrend, engulfing move by the bulls now, looking to set up for the daily higher low for that daily trend change. Where are we reacting from? All of the moving averages. So looking very good on Amazon. Take a look at your lower time frames as well. I was telling you guys, watch when we get the shift of the hourly trend. You will know that your move down is most likely complete. And now we have put in 100% engulfing move, and the bulls are looking to use these short-term hourly moving averages as some support to get that hourly trend change going and really get this daily leg motion higher, right? So looking very good. However, in the event that the QQQs and the SPY have a little bit of a weakness because they are overbought, let's say we fail this all-time high and roll over into a daily downtrend, no problem at all, guys. Amazon still has a decent amount of space, anything pretty much above 174. Just going to be looking to maintain this tightening range. Very, very gorgeous tightening range, guys, because of the area that we're doing it in. We're doing it above our prior all-time high range of resistance, using it now as support. Going to be very tough for the bears to get through this location, in my humble opinion. Amazon has such amazing fundamentals for this year, guys. This area of accumulation is a great location to be playing short puts, in my opinion. That's what I've been doing. 180 down to about 175. Very, very juicy location indeed. I really think it's building up momentum, guys, for the eventual leg higher that's going to push us really into the $200 range. So looking very good on Amazon. No red flags. Any dip buying, any dips down into this maybe mid or to high 170 location could be a very, very decent swing trade opportunity. Now moving on to Google. Google looking very healthy as well, 0.33% to the upside. Google as well, just kind of consolidating right now, right? Really, really tight price action at the highs, defending the 12 EMA relatively well over the past couple of weeks. So it was a daily downtrend. We got the bulls back here, daily uptrend, and now we're just kind of range bound, right? It's kind of a messy chart on Google right now. So moral of the story, guys, if we break 182.04, the all-time highs, daily uptrend simply continues. But if for whatever reason we roll over and break the lows of last, let's call it last Monday, right? That would be an official daily downtrend, which could lead us into a bit more consolidation on the weekly for Google. And the weekly higher low is not that high, guys, about 171, right? So we don't have that much amount of space between us and the weekly higher lows, if ever that is their plan. If ever we were to lose the weekly higher lows and set a little bit of a weekly downtrend, in my opinion, not that big of a deal, guys. Just going to be looking for the very, very healthy monthly consolidation, right? Google has run a lot in the last 4 months. So any extended monthly consolidation, maybe down into the mid 160s, could be a very, very, very juicy location for a trade. And as a matter of fact, that is where I'm most interested in playing Google. If we do get a re-entry opportunity, guys, 167 down to about 160, I will probably be taking this one. Moving on to Meta right now. Meta really performing very nicely today, up about 0.5%. Meta is just really on this gorgeous daily uptrend expansion, right? Tightening range, breaking out of our prior resistance at 482, and now really coming down, trying to set the daily higher low using the 12 EMA as some support right here and trying to go for that daily trend continuation. So Meta is looking excessively good right now. The only resistance that we're dealing with right now is pretty much the all-time high resistance, right? Should be self-evident from the chart. That is pretty much right all the way up here, about 515 to about 520. Let's call it. So that is currently what the bulls are going to be dealing with to the upside in terms of upside resistance, but looking very good. Now, if for whatever reason Meta fails and rolls over back here and sets the daily downtrend, no problem at all, guys. They have tons of space on the weekly, anything pretty much above 453.25, looking for a weekly higher low for that weekly trend continuation. And if ever, guys, we pull back on the weekly for maybe a week and a half, 2 weeks, coming back down to this 482, it's going to be a juicy swing trade, and I will take it, guys. Weekly uptrend, looking for the weekly higher low. Look, the 482 prior support right here, which was resistance, the 12 EMA on the weekly is right there, guys. Very nice area of confluence for a little bit of a swing trade higher. So all in all, guys, Meta bulls are in control of all time frames right now, a monthly control, weekly control, and daily control as well. No red flags. I will let you guys know when red flags appear in the markets, but so far, the bulls are just running away with the show. Now, moving on to Microsoft. Microsoft, extremely healthy move higher, right? Look at this, guys. Pretty much a higher high every single day for the last 10 days of trading. So looking very, very good. We had a little bit of a daily downtrend here. That was since engulfed, and Microsoft's been on a heck of a tear since. Coming into ever so slight daily overbought conditions, but look back here. Microsoft does have the room to push a little bit more. Now, in terms of that, guys, if ever we do top out here, keep a close eye. If ever you're looking for a top out or bottom out on a single move, always look to the lower time frame, the 1 hour chart. If ever we start rolling over in the 1 hour, well, you may expect daily consolidation to be underway. And at that point, guys, anything above 405, looking for a daily higher low for some trend continuation. Now, if ever Microsoft ends up in a little bit of a daily downtrend over the next week and a half as the QQQs cool off, we could be looking for a little bit of a swing trade opportunity, guys. This is the breakout out of all-time highs, retest the all-time highs, and run. So I'm looking for this retest location right here, guys, for a swing trade. That would be 430. So very, very simple trade opportunity, guys. 430, and then we're pretty much targeting the 450 trend expansion. Looking quite good, if I do say so myself. If I would take this trade, guys, I'd probably keep my stops relatively tight, maybe below here, 420, right? So there could be a decent opportunity, $10 worth of risk, and we're really targeting about $20 worth of upside here. So about a 2-to-1 reward to risk. Not that bad in my opinion. Now moving on to Netflix. So Netflix looking relatively good as well, 0.96% to the upside, and Netflix is just in a gorgeous daily uptrend right now. So the bulls just continue pushing higher. Any move down, however, just going to be looking for a daily higher low, anything above 635, looking for that daily higher low for your trend continuation. This is a very same trade as Microsoft, right? Breakout of your 52-week highs, retest maybe the 52-week highs, and run. Could be a very decent trade opportunity. The run could bring us all the way, guys, into our prior all-time high range, which is roughly $690 all the way up to about $700, right? Now, if for whatever its reason Netflix fails and rolls over into daily consolidation, daily downtrend, going to be looking for a weekly higher low, anything above 625 for that weekly higher low. So the bulls do have a lot of space if they need to pull back before further trend expansion. I see no red flags on Netflix at all. Very, very nice chart. Moving on to NVIDIA right now. NVIDIA taking a little bit of a red day today, but not anything substantial, right? 0.68, virtually nothing for NVIDIA. So the trend to the upside does continue. Daily uptrend, clearest day right now. Any further consolidation, guys, keep a look at your hourly trend. We did not even lose the hourly trend yet. So technically, we are not really into daily consolidation just yet. If we do break the lows of today, however, right? If we do break this candle right here, 129.53, that would be an official daily downtrend starting. And then you could have a bit more daily consolidation underway. Anything pretty much above 117, going to be looking for a daily higher low for that continued trend expansion. And where could we maybe expect the bulls to have a first line of defense? Right here at about 124, prior resistance, and your 12 EMA is going to be curling up there as well. Now, in the event that NVIDIA pulls back over the course of the week a bit further, daily downtrend, let's say, well, then we'll just be looking for a little bit of weekly consolidation after such a substantial rally, right? Just a little bit of weekly consolidation would not be a bad thing, which is why I've labeled this area on the chart as my most likely area that the bulls could pull back onto if we do embark on a little bit of weekly consolidation. And that is around the 115 level. 115 level seems to be a very decent line of defense for those short-term bulls. No red flags whatsoever, guys. And in terms of shorting NVIDIA from up here, I mean, it's a gamble, right? It's a speculative gamble. The top is pretty much not set. I would personally be waiting for something a little bit more if I'm looking to short NVIDIA. I would be looking, since this 4 hour has been our guide for so long, I would be looking for a loss of the 4 hour uptrend. As soon as we lose the 4 hour uptrend and lose the 12 EMA on the 4 hour, that's where you can maybe start a little bit of a short. All the stops go above the all-time highs, and then we'd really just be targeting further daily consolidation into our prior line of support right there. So, short is still a little bit of a gamble on NVIDIA, in my opinion, even though it's so overbought, guys. I know. Moving on to Tesla right now. Tesla with a very good day today, 5.3%. I mean, Tesla just started very, very strong on the morning and just kept going the entire day, right? So looking very, very nice on Tesla. It's been a very choppy last 4 days, to say the least. But what the bulls are trying to do, the pattern does work, right? Huge range of consolidation, break out of the top, resetting, setting the daily higher low, now going for the trend expansion upside, right? So we reacted very nicely from our short-term daily moving averages, which are sitting right under the price right there. And you can see we pretty much came back and tagged the average tops of that range, right? Almost tagged them to perfection before trying to get in this daily leg higher. So a break of pretty much last Thursday's trade, 190.77, would be a confirmed daily uptrend. And then we'll be targeting resistance around the $200 level. Looking very good, guys, on Tesla, because not only on the daily are we looking good, guys, but on the weekly as well, right? It's been a very tight range of weekly accumulation, and the bulls need this, guys. They need the weekly uptrend to be set in motion. So if we can really close above last week's high, 191.46, it'll be weekly uptrend officially started, and then we can maybe look to attack, as I've said, the 200 level, and then the next stop pretty much is around the 215, 220 mark, all the way up there. So looking good for Tesla, guys. Finally starting to mount a little bit of a rally, so could just be a continuation trade in there. If we're looking for the continuation trade, I would not be opposed to taking a continuation trade on Tesla from here. The stops need to be pretty tight though, guys. They need to be below the daily higher low, because if ever we fail this, it invalidates the whole breakout trade, right? So that is pretty much the analysis on Tesla. Moving on to Palantir right now. Look at Palantir, guys. Monstrous day on Palantir, 6.15% to the upside, which is why I was saying, guys, down here in Palantir was pretty much free money for the entire month and a half that we were playing it, right? We knew that this was going to be a probable case scenario, especially if the overall markets continued their bullish march forward. And that's exactly what happened. And Palantir was not left behind, right? So gorgeous daily uptrend right now. As soon as this move is topped out, going to be looking for a daily higher low, anything above 22.96, looking for the daily higher low for the further trend continuation. Keep an eye on this level right here, guys. 23.81 could be a first level of fallback for the bulls if ever the move tops out right here. All in all, though, guys, looking very bullish on Palantir daily, and even on the weekly, guys, gorgeous weekly trend continuation, looking very, very good. And now the monthly higher lows are officially in, guys, and we are potentially looking for that next monthly leg higher, which is going to bring us into the 28. Well, not officially, guys. We pretty much called it last week, right? The monthly higher lows were in when we got the official break of the weekly uptrend all the way back here. So about 2 weeks ago at this point, right? So looking very, very good on Palantir. No red flags whatsoever. However, if I am looking to take a little bit more of a position, guys, I will be waiting for overall market weakness and maybe looking for Palantir to consolidate maybe $24, $23, $22, however low I can get, right? Now moving on to PayPal. PayPal not looking the best today, guys. 0.83% of the downside. Now, you know, you could have argued on Friday that this level wasn't truly lost, but now, you know, we have to face the music, guys. The level was officially lost. Huge move down by the bears right now. As soon as this move is pretty much bottomed out, how do you know the move is bottomed out, guys? Look for the hourly trend change. As you can see, no hourly uptrend in this entire move, which is why it's a waterfall drop to the downside. So as soon as we do get that hourly trend change to the bulls, we'll be looking for the daily bounce to be started. And then we will be looking for the size of the bounce in relation to this move right here. And it's a big one, guys. It is a really big move, right? The bulls, to get a good chance at resetting into a daily uptrend, in my opinion, have to get at least as high as the 50% retracement mark, which right now is about $64. So still a ways away, guys, for the bulls to really start recovering this nicely. So let's see what they can do when they do start that daily bounce, but they do really need a lot, right? And not only that, this level that they broke below now is going to be acting as a little bit of resistance. So we do have a number of things acting as resistance, this green box right here, and then the moving averages above us. So PayPal does definitely have its work cut out for it. If ever, guys, we were to set the lower high into lower low, which is the expected trend continuation move, by the way, well then, guys, I may be looking to be buying PayPal down here in this lower location right here, $58 to about $56. This has been my highest level of success on PayPal so far. Usually when we hit there, couple that with, you know, some oversold conditions on short-term timeframes, usually we do get a little bit of a relief rally back into the $60 range. So this is really where I like for playing PayPal moving forward. That's pretty much everything that I had for you guys in terms of the stock market rundown today. Now let's take a very brief look into my portfolio for just a couple of new positions that I opened for the week. All right, guys, so taking a look at the positions real quick, you will notice that I didn't really open that many. That's just because, as I was saying in yesterday's video, guys, I'm going to stay a little bit conservative this week. We're in overbought conditions on the SPY, overbought conditions on the QQQ as well. And when I see such green markets, guys, it's very tough for me to pull the trigger on full buying power. So I did open a few positions, but I'll be looking for tomorrow. If tomorrow is a red pullback day in the markets, considering the fact that Wednesday the markets are closed for a holiday, if tomorrow's red, well, then we're going to be able to go shopping for some premium. And then since Wednesday's a holiday, we're going to get a free day of premium decay, of time decay in our options. So that is what I'm looking for, maybe to add a few more positions. That being said, we did open a couple. So we got the AMD 150s. That was what I was saying in yesterday's video. I was looking for AMD maybe below 150, to about 150. So I got some decent premium down here on the 150s. Could have gone a little bit more aggressive, but I went in the morning when AMD dropped, and we went with the 150s here, guys. 69 cents, about 70 cents minus commission, right? Not quite 0.5%. 0.5% would be 75 cents, but I'm still very happy with this trade, considering the fact that we are in overbought conditions. If ever the market has a general pullback, at least I have a bit more cushion. Now, moving into GameStop, guys, I'm really thinking about closing this trade. I've been in GameStop now for a couple of weeks running. The momentum is kind of dying, and the catalysts for the company are also kind of starting to dwindle away. Roaring Kitty has now closed most of his call options, exercised them as well, right? So we're kind of running out of catalysts here for this stock right now. And the investor presentation day by the company shareholder meeting didn't go too well at all. So if I were to close this position tomorrow, you can see we were running covered calls, guys. If I were to close the covered calls tomorrow for about $1, our average cost is about 23.54. So if you're to close that, guys, pretty much we'd be getting out at about 24.50. Stocks at 25. We really wouldn't be making any money, guys. 50, 60 bucks, but that's okay. We made an attempt over here at about $38 all the way back here, which was high. We've been able to really write covered calls against the position, which brought our average cost all the way down. So we didn't really lose anything on the position, but we didn't make anything as well, right? Just kind of a waste of time, in my opinion, but it was fun, right? It was worth a little bit of an effort. Now, moving on to the next one, MNQ. So I wrote a little bit of a short position here today using NASDAQ futures, and the only logic is we're in overbought conditions, and I'm looking for a little bit of a cool down on these markets. So when I saw later on in the day, the first time that we lost the 15-minute uptrend, looking for the lower high into lower low continuation tomorrow morning potentially. So I took this trade right around here. Stop is going above the all-time highs, obviously, and I'm just looking for a little bit of downside consolidation, hourly downtrend, into a little bit of daily consolidation as well. My take profit locations are probably going to be between 19,600 and about 19,300, right? Just looking for some extended, well, not extended, just looking for some healthy daily pullbacks. And if ever we go past our stop loss beyond the all-time highs, well, we will try this again, right, guys? So really, really quick swing trade for me. Not that much size on it. Only one MNQ contract. Really, really, really tiny, right? Need to see better conditions for me to add more to this. Then we have a couple more, guys. We wrote the ON Semiconductor 67 puts. Those were also in my top 5 options video yesterday. So ON was pretty much looking for 68, 67s. So I got the 67s this morning when we had a nice little dip, right? Very, very decent contract right here. I like this company in this position. 67 puts for 40 cents. So pretty much above our 0.5% rule. Good there. Pepsi, we got assigned Pepsi last week at the 165 strike. You can see the shares right down here. We got about 70 cents for these shares, and now we got about $1.26 for the calls. So let's, for all intents and purposes, call it about $2 in premium, right? So our average cost right now on Pepsi is going to be about 163. So we'll keep this position active and alive. And if ever we get called away on Pepsi this week, perfect. But if not, if we can roll a little bit of calls forward, moving into the end of the week, I'll do that as well. Moral of the story, guys, I really love Pepsi in these lower locations right here. 162, 50, 165 seems to be like a great location to play the stock for me. Now, so those are pretty much the only new positions that I've opened throughout the week here, guys. We still do have a number of other positions that we're currently running too. We have the Intuit share swing trade position that we still have. We have the Square position that's not high enough to write covered calls. Our average cost on Square is around $65.50, so not too bad, not far away from our share price right now. And SoFi, we are assigned around $7. Our average cost with the premium collected from covered calls is around $6.62. So also, even though the price is right around $6.48, not really far away from our average cost on the share, so not too worried about those as well. Which brings me into the last one that I wanted to talk about, guys, CELH. Now, if you guys remember last week, CLH, we literally closed, guys, all the way up here at $59.96. So the stock did close below $60, and we had the $60 strike. But as you can see here, guys, we got very lucky, and this does not happen often at all. It's actually happened to me twice in the last 2 years of trading, once on Google and once now on CLH. You can see here, our 60 put was not assigned. It actually expired worthless despite being in the money. Very rare situation here, guys, whereby when the stock closes very close to your assignment price, you may just not get assigned. And the simple reason is because after the close on Friday, traders have 45 minutes to call their brokers and refuse assignment or exercise, if ever it's calls or puts, right? So the person, I guess, on the other side of my trade refused to sell me his shares of CLH at $60, even though the put was in the money, right? So they can do that sometimes, guys. And the logic behind that trade is usually when things get crushed with very, very quick moves to the downside, daily oversold conditions. A lot of the people, even though they bought protection in the form of puts, right? A lot of people just want to hold on to the shares and maybe try and play the little bit of a bounce on CELH, right? So we got very, very lucky not being assigned, which is why you don't see currently any shares of CLH in my account. I was 99.9% sure that I would wake up this morning to shares of CLH, and I guess was a little bit surprised that I didn't get them, right? So that is pretty much what happened with the CLH position. I will maybe be looking to make a little bit of a swing trade on it. Maybe if I can get some short puts down here, 53, 52. It's just that today CLH was red, but the overall markets were green. So in my head, I figured, you know what? If the markets are red tomorrow, maybe we get a little bit more dip on CLH down here again into the 56, 55 level. And that's when I'm going to be maybe going for the 52, 51, $50 strikes closer to our big level of support coming up. So that's pretty much everything I had for you guys today. Hopefully you guys enjoyed that. If you did, consider dropping a like on the video. Would appreciate it very much for the growth of the channel. And second, if you are not subscribed to the channel, please consider doing so. I would love to have you back here. Over 1,800 of you have subscribed so far, and I've appreciated the journey so far, guys. It's so fun interacting with you as well, and looking forward to many more beautiful videos together to come. And now lastly, guys, if you have any questions at all, if you want me to take a look at a stock, technical analysis, if there's an options play you're considering, if you want to discuss macro, the macro environment, anything you want, guys, leave it down below in the comments, and I'll get back to you usually within the first 24 hours. So take care, guys. See you tomorrow after the close, and peace.